Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the sense of worry in Beijing is clearly rising for a number of reasons. But first, in the US, it is a public holiday today with both the equity and bond markets closed for Martin Luther King Jr.'s birthday. The bullion markets, however, are trading. North of the border, in their Business Outlook survey, which the Bank of Canada takes seriously, it hit its highest and most expansionary level ever in the December edition just released. It reveals fast rising demand, capacity constraints and supply chain issues, strong labour demand and higher pay and fast rising costs, for which prices are being raised. If Omicron hadn't hit hard after the survey was conducted, the Canadian Central Bank almost certainly would be raising rates in their upcoming January meeting next week. Now it's a line call. In Japan, November machinery orders rose faster than expected, both on a month-on-month basis and a year-on-year basis, and that says a lot of positive things about global investment intentions. In China, they reported their fourth quarter GDP was up 4% from the same quarter in 2020, which is a much better result than anticipated, but down from 4.9% in the third quarter of 2021. However, Chinese retail activity struggled in December, rising just 1.7% year-on-year, when a 3.7% rise was expected, and November was up 3.9%. It's their slowest growth in 16 months, and looking past the 2020 pandemic, it's their slowest retail growth in China ever. China's industrial production was a bright spot, up 4.3% in its best rise in 4 months, even if it is unusually low for them. Only a recovering rest of the world and their export orders saved the day. Chinese electricity production, however, tells a different story, and perhaps a real story. It actually fell 2.1% year-on-year. So that kind of does cloud the other data and those results, and suggest even if they are positive, the real story may not be quite so good. Everything in China is national security these days, so reporting declines is frowned upon again. Clearly, Beijing is worried. The People's Bank of China lowered interest rates yesterday, but this wasn't enough new policy support to stop a sharp sell-off in Chinese property developer bonds. This whole sector is in crisis mode. Adding to the sense of worry, President Xi made a speech yesterday where he implored Western nations not to raise interest rates. US Treasury 10-year yield opens today at 1.79% and holding while the New York bond market is closed. And the price of gold starts today at $1,820 an ounce and up $2. Oil prices start today unchanged at just on $83.50 a barrel in the US, while the international Brent price is now just on $86 a barrel. These prices, however, are close to a 7-year high. And the Kiwi dollar will open today at 68 US cents and unchanged from this time yesterday. Against the Australian dollar, we're softish at 94.3 Australian cents, and against the euro, we're holding at 59.6 euro cents. That means our trade weight and index starts today at 72.3 and the same as this time yesterday. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.